Welcome to another Forex Daily Market Review. My name is Derek Schimming with the new TradingFX.com. Now this is for Tuesday, January 29th. And as we looked at the market today, I've got to say that my impression coming in was not correct. When we looked at the market, there's a couple things that should have noticed and probably paid a little bit more of attention to. However, let me give you my brief review of how I saw things earlier. You know, in hindsight, it's always, in retrospect, it's always clear as a bell. You know, as I like to say, hindsight's 20/20, but foresight is usually 50/50. You know, and it's our job as a trader to try and put the odds in our favor. But when we looked at the market today, I really had a different impression than what took place. Let me step the study out a little bit, and I'll pop it out to a 25 so we can do a little bit bigger look back. And kind of this is picking up from yesterday, obviously, but my impression coming into the day is the market was still wanting to be short. When we look at, this is looking at the pound yen, and if we step this back far enough, you can see, I remember we talked about yesterday how the market was at that resistance point wanting to trade down, and I saw it today as being still in that resistive mode with a lot of downside potential. You can see the swing high set last week and the swing high set this week. Again, my concentration and focus has been on the yen pairs because the yen has been in much better play with much greater trading range than the dollar pairs. Specifically, euro yen and pound yen are the only two major currency pairs that are experiencing over 200 pips per day of average trading range. That makes them by far more desirable than pairs that are anywhere from 40 to 25 to 50% less than that. Actually, most of them are about 50% less than that because most of the pairs are closer to the 100 pip per day trading range. So the euro yen and the pound yen are the two that stand out. So if you look at this and seeing the swing high, if you look at yesterday's video, I go back go back a couple more. Actually, I went back to the start of November, so you can use that as a review and pick up from there. But this is the third time the euro yen and the pound yen have traded up to the resistive ranges, or what appears to be a pretty solid range of resistance that was set last Friday, or renewed or reconsidered on Friday, or retouched. So as we came into the day, and let me advance it back forward, I just wanted to show you that as a reference piece. As we came into today, the pivots have been big time in play, and the pivots are a self-fulfilling prophecy because it's something all of us can see. You don't all have the same clarity on your charts as my charting software provides, but even in your time-based world, you're able, we don't change highs and lows and patterns, we just clarify them by disassembling the rapid price moves and reassembling the slower pricing markets. But you can see yesterday and today the pound yen, the euro yen, for the most part stayed below their pivot ranges. So as we approach the market today, it was my belief and opinion that the market would in fact potentially trade lower from those levels. And this is looking at a 25 pip view. If I was to bring this down, we typically look at the market for a little bit more detailed analysis. We might come into the 10 through 18 pip range. I'm going to put it at the lower end of that for greater detail. So here it looks at the 12 pip view, and you can see that the trade had come up pre-London to the pivot point. And as we approach the market today, when we were during the start of the New York session, we did have the euro yen and the pound yen what seemed to be setting some significantly lower highs with the potential to approach the trade low that was set before it retraced back up, and then ultimately the swing low on the day thus far, which would have been the target range to approach. Really looking at this is just below 142, and it was more of an opportunity to see this going to or towards the figure, if you will. There's a couple influences out there that definitely need to be paying attention to this week. You have your FOMC statement coming out tomorrow in the Fed funds rate. Obviously, most analysts believe Fed funds can't be changed because there's no room to go down and there's no reason to go up. So a surprise in the market would be if there was a change to rate, since most analysts concur that there will be no change. We will be looking at the statement to see what type of what the opinion is going forward for the QE and for the purchase facility. That'll be very important to traders globally. We also have the non-farm payroll numbers coming out on Friday, and obviously each month that is our most significant piece of economic data, or what I should say the most volatile piece of economic data. So we really have two substantial things in the works this trading week. And traders inherently are excuse driven. We look for reasons to not do things, and if you get down to it, there's always an excuse, but traders justifiably do look for excuses in the market to sit on their hands, and maybe that should be a little bit greater caution or greater consideration this week, that we should be trading with a little bit more caution until we can get beyond some of these things. So unfortunately, as fun as trading non-farm payroll can be and potentially profitable, it kind of does mess up the week to some degree, but typically not until Thursday. And with the FOMC numbers coming out on the same week on the Wednesday, it does put us in a little bit of a bind. So that also adds to the fact that my impression coming into the day was that we could see some further weakness, but that just did not happen. And you can see from the area that I drew as we started the London session, the market still was trading up. We saw the yen, after having a very strong start to firm rollover, the yen was the most volatile and the strongest trending single currency, as displayed by our CCYX. But what comes up must come down, and so as the yen was moving down, I was still viewing this, or it was my impression that potentially it was moving up just to give us a better short entry, and that just hasn't come to pass. As a matter of fact, you can see that as we move through the day, or through the morning thus far, I should say, that we really have a marketplace. Let me move this over to here, if I may. We really have a marketplace that has decided to go back up to the pivot. So it was a long situation against the current market trend that won out today and gave the opportunity, or what was the opportunity was a long trade against the trend, something I just did not want to bite into. And so it was my decision to not approach the market in what was happening. And in retrospect, again, it's always clear as a bell after the fact, but in retrospect that was a mistake. And but if you're not comfortable with the trade, if you don't see what the market is doing, and if you're not comfortable with what the market is providing, then obviously the easiest thing to do is to do nothing. Traders are inherently thinking they have to be in a trade, and that's just not always the case. I'm still trying to, the video system is not very friendly to my drawing tools, but there. And so you can see that we did move back up to the pivot point. We have violated this high, the swing high that was set prior to the London session, and so this puts us into a quandary. And you have we're overbought at the current time, as displayed. Look at the oscillator at the bottom. You can see on the TFXD oscillator that we are overbought slightly. And so my impression is still that we're short, but unfortunately that hasn't been the profitable way to look at the market so far today. And again, maybe that is because of the external news coming into the market as we approach this week. The other view to consider, and to drive home the point of the uncertainty that the market is facing this week, is in fact looking at our CCYX view. And the currency strength index, you can see again, if this chart is unfamiliar to you, go to the top left-hand corner and you can see each currency labeled in the color. What color each currency is labeled. The yen is in the light blue color, and you can see that the yen started from rollover and was extremely strong and moved to the upside, and then has traded down, volatile, went back up, and maybe this would, again in retrospect, maybe looking at this as a double top in the yen itself. Remember, my CCYX isolates the individual. It disassembles the pairs and isolates the individual currencies so you can see their strength and or weakness as opposed to the market. So we use this tool to put ourselves in the best position, meaning what is moving up and what is moving down and what isn't moving at all. How does that affect the pairs I prefer to trade? Your favorite pair may not be in play today when you look at the individual currencies. The other aspect is to put yourself in a situation where both currencies are moving in the desired direction of your trade. Even though most of the time one currency is usually carrying the trade, we should seek to avoid putting ourselves in a situation where one of the currencies is moving against us. The yen was volatile. It did come back up to its high point, which is about a 28 level on this CCYX view. The range is muted. We did not have the type of pair separation, or I should say currency separation, that we like to see on the CCYX. We had a little bit of abnormal volatility of the yen bouncing so hard, as it looks like a big M pattern here on the chart. But you also had the euro trading down. And you see the weakness to the euro. So inherently, looking at the yen, if you coming off the New York or London time frame, the yen was strong, the euro was weak. Traders in our room during the London session made money trading the euro yen short. It was my impression that that could possibly continue because we saw a little rally coming into the New York time frame. Just did not think that that could continue at the pace it has. And so you can see that since the New York markets have opened, the euro has continued to move higher from its lowest point, and the yen has continued to move down. The other thing that you should notice, the economic data, the consumer confidence report was not positive as far as the dollar is concerned. The dollar has traded down on that news. But you should also notice that the currencies are going relatively flat right now. We're noticing, if I was to take this to a tighter view, you could see that this is the market is really starting to level out. Again, this is going to be the anticipation or the pause or the excuse, again, that traders are going to use to not do anything or do very little until the FOMC numbers tomorrow and the statement is released. And that would be actually a good course of event for the balance of the day. I would be very cautious moving. Your easiest thing to do in an uncertain situation is A, either do nothing, which I already said, or B, reduce your trade size and or the expectations. Should not be looking for that monster trade this afternoon because the market's probably not willing to provide that. But as always, the big trades will find you. Your desire is to make a solid decision, and the above average trades will in fact find you when you're making good decisions. So approach the market for the balance of the day with a lot of caution, if at all. Approach tomorrow morning with a lot of caution, if at all. It might be a good time to be a spectator. It might be a good time to be very conservative. Let's see what kind of volatility comes into the market at the FOMC release time, which is 2:15 Eastern on Wednesday. That could give a kick into the market, and that may in fact provide the opportunity we as traders are looking for to see the type of trade or entry opportunities we've come to enjoy. So if you have any questions and you want to know more about our methods, techniques, or be able to come onto our trade floor and trade with us live each day, just send an email to me at derekschimming@gmail.com or look on our website at newtradingfx.com. I'm Derek Schimming with New Trading FX. You guys have a great day trading.